Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark will take a look at the markets the past week. Sprott U.S. Holdings President and CEO Reaugh talks about what characteristics he often finds in successful people. He discusses how you should look at gold as an investment. Reaugh also points out while people think lithium is the key component in car batteries, other metals make up most of the components and could be a good investment target. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh and Blind Creek Resources President Brian Fowler. We'll talk to Ross Clark right after this.
I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Pleasure to be with you, Jim.
Well, after a few weeks of snoozeville on the markets, it looks like the action has really picked up.
Yeah, Fire and Fury is with us, and clearly having been to the point of having no volatility with the VIX index down into the single digits during July. The S&P having some of its smallest ranges. Actually, the 12-day range on the S&P was up until the end of a week ago was the smallest in history, all the way back to 1928 as a percentage. So we've gone from a very complacent market to one that has got some volatility back in it. The VIX got up to the highs that we had seen back in November, just going into the election, when there was the sell-off there and then the quick action coming out of it. So this is we're back into more of a risk-off marketplace right now. There was good movement into precious metals. We saw it also into the government bonds and also into the high-grade bonds, the corporates there. On the other side of the coin, you've got weakness as far as U.S. financials were concerned, Canadian financials as well. And this, normally as you move from August through into October, you're going to start to see corrections in the market, and never know what the catalyst will be. In this case, Korea's been on the edge there of potential for market action for quite a while, and this escalation in the rhetoric right now between the two leaders has clearly had some market action.
How is oil doing right now?
Well, oil got a bit of a lift during the week. We had been up to 50.5. That's the second time we've traded up to the that 50.5 level in the last month or so. It's pretty good resistance, but from an inventory point of view, we're not seeing anything to support the market. And if we take a look also at OPEC, most nations are once again doing what they have in the past. They're exceeding the caps that they had agreed upon. So as we move now more towards the shoulder season, we get out into September, October, once the driving season is behind us, you'd expect to see some inventory builds. And, I think initially $46 for oil is a pretty reasonable first target. That would give back about half of the run off the bottom. If inventories do start to build up here in the shoulder season, you could easily be looking at sub 40 by the time we get into the fourth quarter.
Also, we have the U.S. Announcing that rig counts are up for the first time in quite some time because they realize this slow period in oil will have to end at some point, and you don't want to have no supply to start off with.
Right. So, but it's interesting, you look at the sand companies and all, you're not seeing any of the stocks really getting any appreciation out of this. I think we're going to be looking at more of a clean out before you want to be stepping into the energy sector. So keep the powder dry as far as that area is concerned. We have been seeing good action, as I say, was on the treasuries in the gold market here this week. Gold and the U.S. dollar had some reversals about a week and a half ago. It looks as though the dollar index, having been oversold, might get a bit of a bounce, and that would put a lid on the gold. But with the build-up of these tensions here with North Korea, we ended up seeing the dollar being capped and the gold market starting to come to life. Not big time, but enough to be of interest to me, because we have that seasonal play, which typically is to be bullish on precious metals from late July through until early October, and it works very, very well in bullish years. And so when you look at the seasonal chart, it has this really vertical move from August through October, but it's only 62% of the years where it actually works. So you need to really refine your criteria when you're looking at this trade. And one of the keys that we have found, there were two good seasonal lows, July 23rd, and then another window for opportunity around the 6th to the 8th of August. And when you break out after the 8th of August, which is exactly what has happened this week, then the reliability of the trade moves up significantly. So gold now having moved into the high 1280s, I think we might have kissed the 1290 the tail end of the week here. This should end up with some legs, and it's moving once again because we have anxiety and times of potential conflict. We don't have participation by the mining stocks. If you look at the GDX, the GDXJ, they're just not moving the way the bullion is. If you look at silver, silver stocks are really underperforming significantly. So we'll probably see some strength still as far as gold is concerned, but I wouldn't be looking for an explosive move in here. And when we look at the action around these periods of anxiety, these periods of conflict, you think back to the Iraqi invasion of Kuwait back in 1990. Interestingly enough, that was an August move. The initial surge that you get in the metals is there until you either have conflict actually start, and you get a repercussion from that, or then you start into the negotiating process and things calm down. So if things escalate big time in the next few weeks and you're long precious metals, it'll be time to look to take some money off the table.
Ross, thank you so much for chatting with us.
Nice to be with you, Jim.
My guest has been Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Coming up, Rick Reaugh next on This Week in Money.
Always consult your investment professional before making any investment decision.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Rick Reaugh, President and CEO of Sprott U.S. Holdings. He's speaking to us from Vancouver. Rick, welcome back to This Week in Money, and welcome back to Vancouver.
Always a pleasure. Thank you.
The Sprott Natural Resources Symposium took place the last week of July in Vancouver. How was the show?
Well, of course, I'm biased as the presenter, but for the fourth consecutive year, we broke attendance records. I haven't looked at all of the attendee responses from the show, but certainly from the point of view of most people attending and the exhibitors, it was an overwhelming success.
Is this a show that people pay to get into, or do you have free how does it set up?
It is, in fact, a paid-for show. One of the things that we think makes the conference work is that the conference is attendee-focused. At the free shows, of course, the conference sponsors' loyalty is to the exhibitors who pay the bills. At this show, our focus is the attendee who also pay the bills. It's important to note that because of that attendee focus, two things happen. One is that the attendee evaluation forms, that is the way the attendees rate the speakers for this year and choose speakers who weren't on the roster for next year, shapes the nature of the event. The second thing that's interesting is that the attendees have told us that the exhibitors at this show are not advertisers from their point of view. They are content. The consequence of that is that every exhibitor present had to be owned in a Sprott-managed performance fee-generating account. Now, there's no guarantee that because Sprott owns them, the stock goes up, but there is a guarantee that we knew the companies well enough that we owned them with our own money. So the fact that this is a paid conference means that the focus is on delivering value to the attendee, unlike many of the free shows.
What did you learn at the show?
I think we learned quite a few things at this show, actually. Now, I will say it was a little, as one might expect from a Sprott show, it was a little biased towards gold, which one would expect associated with the Sprott brand. But what was particularly interesting to me, and I knew this, but it reinforced it in me, is that separate and apart from commodities, when you look at junior mining stocks, look more to the people than to the properties. We had the Living Legends panel, where we had entrepreneurs who were active in business who had built billion-dollar companies that they still ran. The purpose was not so much to focus on the company, but the process by which these entrepreneurs built billion-dollar companies and how those lessons guided their portfolio, and further, how investors could identify the personality traits that would lead to these serially successful entrepreneurs. We had Bob Quartermain, of course, responsible for the success of Silver Standard and now Pretium. We had Ross Beatty, a serially successful entrepreneur. We had Robert Friedland, perhaps the most successful mining entrepreneur of my generation. And we had Randy Smallwood, who, of course, was responsible for building Silver Wheaton from nothing to a $10 billion market capitalization company. And then the next day we did something really unusual. We, the old guys, if you will, the first panel we called the Living Legends. And then we had upcoming legends. We had younger entrepreneurs in their 30s and 40s who had already succeeded and appeared to us to have the attributes that were necessary to continue success through their career. So I would say that the most important thing that was reinforced to me was the importance of serially successful people in a very, very, very difficult business.
Should you be looking at the personality of the people running a company, people who are more dynamic versus those who are more technical?
Well, I'll tell you what we've learned. First of all, the really successful people, not surprisingly, turn out to be very, very smart. But the truth is I've known some extremely smart people who failed. So they need to be more than smart. In particular, I think they need to be absolutely tenacious. Every one of the living legends I talked to talked about the fact that they worked for most of a decade to become an overnight success. In other words, they worked through bull markets and bear markets, and they had to stare down failure in order to build billion-dollar companies. The next thing it turns out that they have to be is they have to be intensely curious. They have to be people who are curious about sort of every facet of human existence, so that they don't approach a problem in a linear fashion, but rather approach a problem from many different points of view, because many of the problems they faced have been faced by earlier entrepreneurs who failed to solve the riddle because their approach was too sort of unidimensional. So these people have to be intensely curious. And in addition to being tenacious, these people have to work extraordinarily hard. So you need a hardworking, tenacious, determined, curious individual. The other thing that strikes me, and I don't know if you have to be this, but I think it helps in terms of your personal brand, these guys are all very, very nice people. Bob Quartermain, as an example, building Silver Standard, didn't hoard all the options. He made everybody on his team have options. So towards the end of his duration at Silver Standard, I actually got an email from a receptionist thanking me for being part of a process that allowed her, through her options exercise, to buy a condominium, something that she never could have done on a receptionist's salary. The truth is that all of the people I talked to that have been serially successful turn out to be extraordinarily nice people, too.
Are you already planning for your show next year?
Of course. You, if you relax at all, your competition passes you, and my competition will not be allowed to pass me.
What do you think is going to be the highlight for next year?
Well, we have an interesting range of speakers next year, but one of the things that I think was missing this year was more discussion, more in-depth discussion of commodity markets. So while I can't guarantee it, I've invited the World Gold Council, the Silver Institute, and the Platinum Guild to come give an in-depth analysis of precious metals markets, the kind of analysis that's only normally available in the boardrooms of, multinational, billion-dollar public companies or big banks.
Is the U.S. dollar in a bear market?
You're asking a question above my pay grade, I'm afraid. I think it depends on on what you view the dollar against. If you view the dollar against a basket of world currencies, I can see it getting softer relative to the rest simply because it has been so strong. I'm reminded of Doug Casey's observation that the dollar is the worst currency in the world with the sole exception of every other one, or his other description of the U.S. dollar as the prettiest mare at the slaughterhouse. Certainly, all fiat currencies tread eventually to their sort of intrinsic value, which is, of course, zero. I remember Alan Greenspan saying that a strong currency is inconsistent with the concept of a representative democracy. That's because in a representative democracy where people vote, the spenders, who are the most numerous members of society, will always vote to steal the wealth of the savers. And the way that you do that through legislation is that you burden the unborn with debt. So the truth is that a strong fiat currency in a representative democracy over time would seem to be impossible.
Well, burden the unborn, isn't that why we should be looking after government debt? Or we did have a finance minister who passed away who said, we don't have to worry about this. This is our grandchildren's problem.
Yes, of course. And that's an amazingly arrogant point of view. The immediate past president of the United States, who I must admit I'm beginning to like better than the current one, said, this isn't really a problem. We owe it to ourselves. Well, that's strictly speaking not true. The spenders owe it to the savers.
Can a declining U.S. dollar cause stock markets and commodities to rise in price?
Oh, absolutely. I mean, it depends on the commodity and it depends on, every other circumstance. Certainly a declining dollar would, as an example, in equities, help U.S. exporters. It would lower their costs and perhaps aid their sales on a global basis. And certainly a declining dollar helps the perceived value of commodities because commodities on a global basis are priced in U.S. dollar terms. The situation, I think, with precious metals is a little different in that precious metals are regarded as competing stores of value with the U.S. dollar. It's important to note that the U.S. dollar is actually a medium of exchange. It isn't a store of value. It represents payment, while gold is payment in and of itself. That's a critical difference in terms of crisis or in times when the price action of the U.S. dollar makes it seem like a less reliable store of value. So I think particularly with regards to precious metals, declining U.S. dollar aids the perception of the increase in purchasing power in competing money forms, including gold, silver, and platinum.
Do we have to look at gold as an investment in our future? Is it a safety valve, or is it just another thing that we trade back and forth that might have value now and then?
That's a very good question. I think it depends on the person. For me personally, gold represents insurance. I'm in the odd position because I am a large shareholder in Sprott and work for Sprott, of really being in a position where I don't need to own gold, in the sense that if the gold price does well, Sprott's business will do extraordinarily well, and the price of my stock should reasonably be expected to soar. That notwithstanding, I own a reasonably large amount of gold, and I own it as catastrophe insurance. Gold does well during periods of monetary and social dislocation. So ironically, I own a rather large piece of an asset class that I actively hope does not go up in price. If you think of gold as insurance like I do, think about the consequence of a price rise. If you get paid off on your life insurance, it meant somebody died. If you get paid off on your house insurance, it means that your house burned down. If you get paid off on auto insurance, it means you had a wreck or somebody stole your car. The set of circumstances that causes the gold price to rise a lot, actually, are invariably unpleasant circumstances.
Canada has a Liberal Prime Minister. BC has an NDP Green government. Do you think Vancouver will still continue to be the junior mining capital of the world?
I do believe that Vancouver will be the junior mining capital, irrespective of the idiocy of the elected legislators. The truth is that the prior NDP government, try as they could not derail Vancouver's advantages. Those advantages include, in effect, the network here in Vancouver. At the provincial level, the BC Securities Commission has very, very deep experience in mining. And whether you agree with their conclusions or not, at least they know what the words mean, unlike regulators in other parts of the world. But the financial services infrastructure that exists here, and the infrastructure with regards to science and consultancy, is absolutely top rate. You have a cluster of excellence here in Vancouver that actually came about accidentally. It amuses me when I see the province and the city strive mightily to attract the motion picture business to Vancouver, when the mining business actually generates something like 20 times as much employment with absolutely no subsidy whatsoever.
But it doesn't look as good in an evening gown on the red carpet.
My suspicion is that the politicians are very attracted to the glamour of the motion picture business and not much interested in the reality of their constituents' paychecks.
We'll have more with Rick Reaugh next on This Week in Money.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Rick Reaugh, President and CEO of Sprott U.S. Holdings. Rick, the U.S. dollar is also known as a petrodollar. Does the declining U.S. dollar bode well for oil?
I don't know the answer to that. I don't know how important a declining U.S. dollar would be to the oil price. Of course, the nominal price of oil, because oil is priced in U.S. dollars, would be expected to do well with a declining dollar. But the oil price really in the next 2 or 3 years will be a function of whether or not you have a resumption to economic health on a global basis. The synchronized decline that we've seen in the last 7 or 8 years in the global economy is unprecedented in my life. And although as Americans we tend to blame the oil price increase on the increased efficiency of U.S. oil and gas producers, in truth the soft oil price is really a function of very, very weak global demand. And until you see a resumption of demand for hydrocarbons, I suspect that you're going to see soft oil prices almost irrespective of the strength or weakness in the U.S. dollar.
Are electric vehicles a big threat to oil right now, considering that they make up less than 1% of the market?
They're not a threat in a time frame that has any net present value at a 10% discount. Looking forward, I think they reduce demand for oil in the sort of 8 to 10 year time frame. But the truth is that the energy utility of oil and gas is unprecedented. The amount of energy that can be released in a fairly small unit of fuel is spectacular. And the other thing is that hydrocarbons have lots of other uses. It would be good for the world, frankly, if hydrocarbon demand for transportation fell, and if our ability to use hydrocarbons for other things, plastics, polymers, fertilizers, increased. So while I see electric cars displacing demand, particularly in those economies that can afford the incredible infrastructure necessary to distribute electricity and can afford the upfront subsidies for green energy, which people seem to prefer, and can afford the upfront costs necessary for an electric vehicle relative to something like a Toyota Hilux, I think you'll see some displacement, but I think you'll see much less displacement than was discussed at the Sprott Vancouver Natural Resources Symposium.
At some point, are interest rates likely to rise to support the U.S. dollar?
I think interest rates at some point in time will rise because the market insists that they will rise. You will notice that last year the Fed raised the U.S. discount rate by 25 basis points, and the market took up the interest rate on the U.S. 10-year Treasury by 100 basis points. In other words, the market magnified the Fed's action 4 to 1. The truth is, with regards to the world's bellmark savings instrument, which is the U.S. 10-year Treasury, yielding 2.2, Jim Grant has famously described that instrument as return-free risk. Think about the concept of return-free risk. Think about how attractive that is. At some point in time, people will choose other savings vehicles or other savings types, and the need for capital will have to be met by increased interest rates. At some point in time, you can't print yourself out of a solvency crisis by adding liquidity.
The commitment of traders' numbers are looking better for gold and silver. Are you bullish mid to long term on gold?
I am very bullish long-term on gold, not because of the commitment of traders, which is a very short-term phenomenon, but rather because having been on Earth now for 64 years, I see the march of history. We talked about this on your show last year, but on my way to my office in San Diego, I pass a Motel 6 every day. Motel 6 is called Motel 6 because when I was a younger man and had occasion to need to stay there, a room was $6 a night. Now the sign routinely says, Motel 6, $69.95. In other words, the price has escalated 11-fold. Now, you need to decide, is that because a room at Motel 6 is 11 times larger and has 11 times nicer furniture and fixtures? Or is it because in 35 years, the purchasing power of the U.S. dollar relative to a room at Motel 6 has declined by 90%? My suspicion is, of course, the latter, that gold holds its purchasing power over long periods of time, while the U.S. dollar, which is a floating abstraction, of course, loses value.
Is silver more volatile than gold, and does a bull top in silver usually precede a top in gold?
The answer to the first question is yes. Silver is much more volatile than gold. In my experience, the gold market leads, meaning that gold moves faster, but silver moves further. Tops in silver, in my experience, usually lag tops in gold, but relative to the starting point, if past is prologue, the top in silver in a percentage basis will be higher than the top in gold.
The metals used for electric vehicle batteries are in the spotlight. Do you see commodity prices for lithium, cobalt, manganese, and nickel continuing to climb?
In the very near term, I think the lithium price can go up, but we don't have a shortage of lithium. In fact, we have a surplus of lithium. The world's 4 large lithium producers believe collectively that they have 100 years reserves. What's short is productive capacity, meaning that demand for lithium grew faster than the processing capacity necessary to convert these resources into usable product. The industry at these lithium prices will take care of that. Remember also that by value, a lithium-ion battery contains 4% lithium. It's actually a copper-nickel-cobalt battery with a frosting, in fact, of lithium. Of the battery metals, far and away my favorite is the cobalt. The difficulty with cobalt investing is that to be a bottom quartile cash cost producer, one would seem to either have to be in Congo, which is a hard country, or in Russia, which is a hard country. Investors, of course, whose knowledge of cobalt is somewhat constrained, would like politically correct cobalt. That is, cobalt from some place that's warm and fuzzy like Canada. The problem is that there isn't any, or very little. Yes, there's a town called Cobalt, because somebody found a little cobalt there. But Canadian cobalt, or for that matter, American cobalt, first of all, exists in small deposits in small size, and secondly, is extremely costly to produce relative to countries that actually have a cobalt industry, like Congo, like Russia. I suspect that the higher prices for cobalt will lead to an expansion of exploration for cobalt in mafic and ultramafic and lateritic terrains. I'm attracted to cobalt exploration in places like Australian and Brazilian laterites. But it's important to note that it's a different business. That's exploring for cobalt, not producing cobalt. If you want to produce cobalt, you're going to be in Katanga in the southern part of Congo, or you're going to be up in Norilsk in northern Russia. Those are your two choices.
The Russian Prime Minister says the latest U.S. sanctions against Russia amount to a trade war. Is he right?
Yeah, probably. I think it's unfortunate that so much of world affairs is dictated by leaders. I think we'd be way better off without either Trump or Putin. By the way, I'd like Trudeau to resign too, just for fun. The idea, as an example, and I'm getting off your question a little bit, but the idea that a free trade treaty between the United States and Canada, NAFTA, has 3,600 pages, tells you how free it is. It's managed trade. If you and I wanted to negotiate a trade deal between yourself and myself, on one piece of paper, we would say there are no restrictions on who buys what from who or who sells what to who. This whole circumstance around trade and Russia is political, and it all has to do with the preferences of elites. It has nothing to do with the needs of Russians or Americans or Canadians.
Trump just said the U.S. doesn't have to worry about Canada on trade. Is that good news for Canada going into the NAFTA talks?
Well, I wouldn't worry too much about what Trump says, first of all. If you did worry about what Trump said, you couldn't get out of bed in the morning because he says so much. I think, given the relative strengths of the two countries, that U.S.-Canada relations are probably, unfortunately, more important to Canada than the United States. But the truth is, it's just unseemly to insult your largest trading partner. It's idiotic. The two countries are joined by the longest peaceful border in the world, and the supply chains and the economic chains in both countries are so deeply interwoven that anything that happens to the United States impacts Canada, and anything that happens to Canada impacts the United States.
What impresses me about the Trudeau government, about their NAFTA team, is that they have now included the former Conservative industry minister, James Moore, and the Conservatives' interim leader, Reaugh Ambrose. Does that show that this is a government that has an open mind and wants to be as productive as possible at those talks?
I think that's an extremely rosy outlook. I think what you did is you added Tweedledum to a team that formerly included only Tweedledummer.
We'll have more with Rick Reaugh next on This Week in Money.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, President of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Rick Reaugh, President and CEO of Sprott U.S. Holdings. Rick, the race is on to develop new technology for electric vehicle batteries. Could that be a disruptive technology for the miners?
Well, hopefully the whole notion of batteries and distributed power will lower production costs and lower exploration costs in remote locations, and will also increase the consumption and utilization of a range of minor metals, which would, of course, be very, very good for the mining industry. So I think it's beneficial for the mining industry in two different sets of circumstances. I also think that the ability to generate power from diverse sources and the ability through technology and algorithms to evolve a smart grid so that we can move more efficiently power from where it is to where it's needed will benefit, and benefit in an extraordinary way, the entire economy. And the mining industry, despite the preference for doom and gloom experienced by some of its investors, is very, very much tied to economic growth. Anything that we can do to improve the material well-being of mankind, and certainly production efficiency does that, augurs ultimately to the benefit of the mining business.
So far, has the Trump administration been good for the mining industry?
I think the Trump administration is a non-entity. I think the Trump narrative is extremely powerful, so everybody expresses their preference for or against. I think Trump is a sort of a brand for what is, to me, a very odd opinion of the social circumstance. But in terms of Trump's practical impact, the truth is that the power elite of his own party don't like him. The power elite of the opposition hates him. And the power elite of the deep state despise him. In other words, Washington is lined up decidedly against him. And he compounds that by trying to pick 50 or 60 fights rather than winning one or two. I've actually, the cynic that I am, become cautiously optimistic because I think a president who accomplishes nothing in 4 years is probably the best I could possibly hope for. A president who was effective, a president who could unite the power elites to pass more regulations, to make NAFTA 6,000 pages instead of 3,500 pages, is my worst nightmare. If all Trump was able to do was wander around and smile out of that orange face and send out idiotic tweets, and nothing happened for 4 years, he would probably go down as the best president in my lifetime.
Americans, of course, have a whole different healthcare system than Canada. Should the U.S. have socialized medicine like Canada and get over the political debate that takes place every day about it?
I think you can tell from my prior remarks that anything to do with socialism feels to me like fascism. Should the United States have a socialized healthcare system? Absolutely not. It's not my business to tell Canadians what to do. I'm a guest when I'm up here. Now, I will say that living in Southern California, one of the prime beneficiaries of the Canadian healthcare system is me. You guys export some spectacular doctors who don't like the pay grades in Canada and don't like the restrictions imposed on their practice. So hospitals like Eisenhower in Palm Springs have a heavy population of superb Canadian doctors. In addition to that, our healthcare facilities benefit from Canadians who come down and access the system in the United States because they don't like the delays that they encounter in the Canadian system. So while the Canadian system probably has benefits for Canadians, it has odd benefits for people like myself who live in parts of the United States with heavy populations of Canadians because of the incredible export of doctors that we enjoy from Canada and the increasing influx of patients that we get in Canada who are impatient with the vagaries of the Canadian healthcare system.
I did greet a train full of Californians who came to Vancouver to take advantage of our lower prescription prices. Is that a problem for Americans?
No, it's a benefit for Canada. The United States is a fascist regime, too. And drug prices in the United States are, of course, set politically so that they're extraordinarily high. Now, it is true that the extraordinary high prices that Americans pay for prescription medicine stimulates the largest research and development effort in the world. So in one sense, high prescription drug prices in the United States subsidize low prescription drug prices everywhere else because you amortize research and development expense with high margin markets like the United States. I would prefer that drug prices on a global basis were in fact competitive and that there were no enforced monopolies on anything anywhere in the world.
Which states are frowning on mining?
Every U.S. state frowns on mining. There are some states where mining is so integral to the economy that the political elite can't steal all of the surplus generated by mining. Those states would be, in particular, Nevada, Wyoming, West Virginia, and Alaska. You could regard every other state in the United States to a greater or lesser degree to be hostile to mining, openly hostile.
Are you concerned that the new government in BC will be anti-mining?
I'm quite concerned that the new government in BC will be anti-mining. Mercifully for the mining industry in BC, I forget the MP's name, but it's the MP that represents Stewart. And the community in Stewart, in this MP's riding, in particular the First Nations communities, the Shkukum-Laksha, the Nishka, the Tahltan, are very pro-mining. And so the ability of the mines minister in BC to be too anti-mining will be constrained by virtue of the fact that if this MP becomes too anti-mining, the MP will be thanked, excused, and allowed to pursue other employment opportunities. And of course, the continuation in power is the most important determinative action of any political leader.
Does it look like geopolitics going forward will create a tailwind for the precious metals?
Yes, I think geopolitics will create a tailwind for precious metals. Precious metals do well in times of uncertainty, and the political process, if it generates nothing else, generates uncertainty.
How worried are you that the U.S. will do something violent in reaction to North Korea?
I'm quite worried that the United States will do something violent in reaction to North Korea. You know, when you think about it, this their moron, Kim has learned valuable lessons from the United States. If you give up your nuclear capabilities, like Saddam Hussein, like Muammar Gaddafi, you get killed. If you keep your nuclear capabilities, like Iran and Pakistan, you stay relatively safe. The incentives that we've put in place, the incentives that the United States has established and enforced, means that if you are a rogue, you're okay, and if you show any kind of weakness at all, you get killed. In one sense, we in the United States are the authors of this moron.
What are the safest mining jurisdictions to invest in?
Well, anytime the legislature is in session, no man's purse is safe. In terms of safe mining jurisdictions, I'd prefer to use the word safer. I think Australia is safer. I think Chile is safer. I think Saskatchewan, Quebec, and Newfoundland are relatively safer jurisdictions. I would be hesitant to use the word safe to describe any political jurisdiction. Remember that the politician's true job is to redistribute, which is a fancy way of saying steal. And mines are fixed targets. Once you've put $1 billion in place, you can't move the damn thing across the border. So they're an extremely attractive target for a very experienced gang of thieves.
Is it still difficult for Americans to invest in Canadian-based junior resource stocks?
The answer to that is yes. It doesn't need to be difficult, but complying with securities regulations on two sides of one border makes things very complex. At Sprott, we've spent 30 years learning how to navigate the sort of complexities of securities regulation. And so we've been able to make trading securities or Australian securities or British securities, for that matter, fairly easy for Americans. But it's taken us 30 years and hundreds of thousands of dollars to put in place the circumstances to make it easy. In particular, it's difficult for Americans to participate in private placements in Canada and scrape the restrictive legends simultaneously with the ability of Canadians to scrape the restrictive legends. We know how to do it, but the legislation on both sides of the border makes it difficult. It reminds me again of NAFTA, a 3,600-page document talking about free trade.
If you had a chance to trim these regulations, which ones would you jump on first?
If I had a chance to trim the regulations, I would double the pay of Parliament and Congress, and I would require them to stay home.
Do you find the more a government interferes in a particular sector, the more trouble that sector runs into?
By nature, of course. I'm reminded of a wonderful quote by H.L. Mencken, who says that you understand elections if you regard them as advanced auctions of stolen property. The job of the political class is to bribe various constituencies to support yourself in return for stealing the wealth of other constituencies and transferring it. Von Mises, I believe it was, that said that you understand politics by examining the root of the word. Poly, of course, from the Latin for many, and tick from the English colloquial for small blood-sucking insect. If you understand the process as many small blood-sucking insects, then you understand the political process. And while it can benefit individuals who understand the process well, the whole concept of stealing from the productive classes of society for redistribution to the voting classes of society can never be good for the economy as a whole.
What sectors are you investing in right now?
I think that the precious metals equities sector is particularly attractive. The gold price has done well even in U.S. dollar terms, which has only happened twice before in my career. And the gold stocks, although they had a tremendous move in 2016, have given back a lot of their gains. So I think that the gold stocks are underpriced relative to gold itself. And I think the malaise in the gold market, the malaise in the gold equities market, has meant that there's reasonably good entry points. I'm also interested in the fact that the junior gold sector has been driven by the ETF. The GDXJ has been such a successful product that the companies that were included in the GDXJ did very well relative to their peers, which means that the advancement in gold stocks has oftentimes been limited to 60 or 70 stocks. The dislocation between the included companies and the excluded companies is becoming so dramatic that the excluded companies have a much higher cost of capital and much reduced liquidity. Being the bargain hunter that I am, I would prefer to look for value among the excluded companies and wait for them to be taken over by the included companies. So I'm very, very attracted to the precious metal space. Understand that my time frames might be longer than your listeners. I'm looking for a circumstance that matures in the 18-month to 2-year time frame, while many speculators appear to have trauma holding stock over a long weekend.
I was just going to ask about that. Has that trend become popular because, as Carrie Fisher said, the problem with instant gratification is that it takes too long?
I think that's very much true. I think some participants' performance in the market is driven not by the market, but by their own performance and perception. I'm informed that sometimes as much as 1/2 of the GDXJ is contributed by the constituent ETFs, the double long and triple long, nugget and dust, and that the average holding period for speculators in nugget and dust is 2 to 3 days. You make money in junior stocks by answering unanswered questions, and characteristically those unanswered questions take 18 to 24 months to answer. The idea that somebody can somehow conform in their mind that you're going to make money in 2 or 3 days, a process that takes 18 to 24 months, is an extraordinary difficulty. And it's not the fault of the market. It's the fault of the market participant, the speculator, who has unrealistic expectations about what he or she buys.
If you had a chance to advise the president for a day or so, what kind of advice would you give Mr. Trump?
Demand an immediate recount and resign. I mean, there's no good that can come of a strong president. If you have the view of the political process that I do, the very, very best thing he could do is be ineffective.
Should politicians have to take a Hippocratic oath like doctors, and the first thing you do is no harm?
Well, understand that politicians take oath every day. The process forces them into a circumstance where you can tell they're lying when you see their lips move.
Rick, could you tell us a little bit about Sprott U.S. Holdings before you go?
Yeah, Sprott U.S. Holdings is a private wealth business geared to U.S. and international investors and focused on natural resources and precious metals investments, particularly focused on international, that is non-U.S. domiciled companies with market capitalizations less than $1 billion. We are active providers of management services for individual investors, institutions, and corporate investors, and we are active suppliers of capital, both debt and equity, and off-balance sheet financing to public and private natural resource issuers. And when I say natural resources, I mean mining, oil and gas, agriculture, timber, mariculture, ecotourism, the whole range of natural resource-based businesses. We've been doing so for 30 years. We're 100% owned by Sprott Inc., which is listed and domiciled in Toronto. On the Toronto Stock Exchange, our symbol in Toronto is SII. In the United States, it's SPOXF.
Rick, thank you so much for being on This Week in Money.
Always a pleasure. Thank you.
My guest has been Rick Reaugh, President and CEO of Sprott U.S. Holdings. He was speaking to us from Vancouver. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark and Rick Reaugh, and thank you for listening. And at the end of our show, we'll have company showcase updates with American Manganese CEO Larry Reaugh and Blind Creek Resources President Brian Fowler. If you have any questions for the show, you can email us at info@howstreet.com. That applies for our guests as well. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm chatting with Larry Reaugh, President and CEO of American Manganese Incorporated. Welcome back to the show, Larry.
Well, thank you, Jim.
Larry, you had a press release on your Rocher de Boule BC Cobalt and Gold sampling results Thursday. Could you elaborate on those?
Well, they were pretty spectacular. They were rock samples taken, some in place, some in that was float. They measured up to 4.5 ounces of gold and 2.5% cobalt. Now that's pretty good. I mean, there was actual shipments off of there that averaged up to 6 ounces of gold per ton, and the cobalt averaged 2.5% per ton. So this is back in the early days. This is a very rich area, the Rocher de Boule property. They've got very high copper and silver, zinc, lead, molybdenum, and I always considered this to, in all likelihood, is an IOCG. So, as the geologists have said, it could be an IOCG or a porphyry. I lean towards IOCG because of all the different metallic interests that are in there. What does this say for the project? Well, it's still early stages, but we've identified an area that and focus on the property. And after we get the second lot of results out of there, the deep penetrating geochem work, we may have some targets, because it's always been conjectured by the geologists and the government that there is a buried system there, a heat engine that could be, quite rich in these metals. So I'm excited about that. I love that property. We've had it 17 or 18 years in the company, and we've done some work on it, but never give it the focus that I'd like to give it. And of course, right now our major focus is on the recycling of lithium-ion batteries.
Larry, there's been a lot of interest in manganese lately. Bill Joy, a well-known battery expert, has developed a rechargeable alkaline battery that will replace lithium-ion rechargeable batteries. Now, how does this affect American Manganese's shareholders?
Well, the first way that it would affect us is it takes a long time to actually commercialize a new technology like that. But it would be a technology that you wouldn't have any risk of fire or explosions. And so that's on the plus side of it. But how would that affect us? Well, I think we'll have many years of recycling. And this would revive our manganese project at the Tillery Peak in Arizona. If you remember, Jim, we spent millions of dollars when we first developed the technique for treating very low-grade deposits in Arizona. And out of that, we actually produced chemical manganese dioxide from the Tillery Peak ores that we proved could be made into lithium-ion batteries, rechargeable batteries. So, we got our feet in both camps here. If there's a slow revolution going into rechargeable alkaline batteries, we can reactivate the Arizona project, and we'd be the first producer in the United States, or Canada for that matter, that would be producing chemical manganese dioxide or electrolytic manganese dioxide for the lithium-ion battery business, or for the dry cell business, which certainly uses about 80% of that product today. And so I just want to let the shareholders remind them that we've actually got all our bases covered, and it's more of serendipity than anything else. We wouldn't have had the recycling if we hadn't done the work on the manganese, because that proved to be the linchpin from which we've developed a very successful recycling program. That recycling program, by the way, we've gotten 100% of all the metals back, and it surprises me that the stock is still down here when there's shortages of cobalt, and that somebody's not trying to take over the company or trying to make a deal. We've got lots of interest, but nobody's stepped up to the plate yet.
Activity in American Manganese has turned positive in the past several days. Care to comment on that?
Well,
you're starting to see a lot of articles on the shortage of metals, which is lithium, and especially cobalt. And you're starting to see, that Bloomberg's taking a special attention to it, The Guardian, The Economist. There's articles coming out of there. Recently, there's been 3 companies, major mining companies, that have talked up the metals that are used in lithium-ion batteries. As a matter of fact, they're basically saying that this is the way of the future, and in order to be involved, they have to gear up for that. So this trickles down to a little company like Amy, and I'm starting to see a stronger market in the company. And the last several days, or almost 2 weeks, we've been gradually moving up and taking out the offers. And that's a good sign. That's a bullish sign for the company. I think we're starting to get some recognition out there. There's certainly hundreds of thousands of eyes on us. We know that from the work that we've done. We know that from the communications we get from all over the world. And, when they decide to get off the fence and do a little bit of buying, that will change the whole attitude of where the company's going. And so I'm very encouraged with the market, especially since we've had really quite a bearish market in all the markets, including the TSX Venture Exchange, for the last month or so. So, for us to swim against the tide is a good sign. And it shows that these are real buyers that are coming in, and we're still taking out some of the predator trading. They're being offered up. And but in some of the tired longs, of course, you always get tired longs. There's somebody who needs money, and but that's okay. The market is handling itself right now.
Larry, for new listeners, can you maybe give us a bit of a background about American Manganese?
American Manganese is a mining company that has a couple of technologies in it, and these were developed for metals. And it also has a website out there where you can find all this material out, called AmericanManganeseInc.com. You can contact the company and myself at my email, Reaugh, L-R-E-A-U-G-H, at amymn.com, or give me a phone call, which is 778-574-4444. Now, the basics on the company is it trades on the TSX Venture Exchange under the symbol AMY.V, and it trades on the U.S. exchange under the symbol AMYZF, and trades in Frankfurt under the symbol 2M.
Larry, thank you so much for the update.
Well, thank you.
We've been speaking with Larry Reaugh, President and CEO of American Manganese. I'm Jim Goddard. We were chatting on August 11th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. We're speaking with Blind Creek Resources President Brian Fowler. Welcome back to the show, Brian.
Thanks, Jim. Great to be back.
For our new listeners, what can you tell us about Blind Creek?
Yeah, Blind Creek's been listed on the TSX Venture Exchange with the ticker BCK since 2004. The company is focused on lead, zinc, silver, and more recently gold project acquisition, exploration, and development in Western Canada. The company has been dormant for a number of years due to the downturn in lead zinc prices until this spring, and with the renewed interest in zinc due primarily to supply issues and overall price increases, the company believes now is the time to renew its efforts to develop Blind Creek into a major zinc explorer, project incubator, and developer.
What's the capital structure of Blind Creek?
Blind Creek has 21.5 million shares issued, 0.3 million half warrants out right now. 43% of the shares are held by company insiders. and our current market cap is just north of $4 million.
Why is Blind Creek so bullish on zinc right now?
Quite simply, Jim, zinc demand is rising. Demand rose 2.7% last year, and it's expected to rise 3.8% this year, and a similar amount next year. Additionally, refined zinc production fell 0.4% last year, while mine production dropped 6.7%. So all told, this means a deficit zinc market for the next 4 years. The deficit means stockpiles will continue to get drawn down, and when stockpiles sink below critical levels, the price reliably responds. We're heartened by a comment by James Fraser, the editor of Mining Stocks Investor Guide, who states that the best way for investors to play a zinc price move would be to invest in zinc equities. And we believe the more astute resource investors are starting to realize this.
I know that 3 or 4 of the world's largest zinc mines are recently closing or about to close. Is that one of the reasons why Blind Creek is so optimistic right now?
That's a big part of it, Jim, certainly.
What makes Blind Creek different from other Canadian zinc explorers?
There's no shortage of narrow vein and VMS, silver, lead, zinc, copper, junior explorers in Canada. While some of these projects and deposits have been very profitable in years gone by, generally such deposits are small, they're hard to find, they're costly, and difficult to make economic and develop. Also, the zinc market is notoriously cyclical, and for a company to survive and prosper, its zinc prospects have to be large, high-grade, unencumbered by complicated deal structures, poor access, environmental, and First Nations issues. Blind Creek takes all these factors into consideration before taking on a zinc property. There are numerous zinc, lead, silver deposit types, and Blind Creek focuses only on large, high-grade mineralizing systems capable of turning into company builder-type discoveries. For the geologically inclined, these deposits include large carbonate-hosted replacement deposits, such as our 100% owned Blend deposit, which happens to be one of the largest undeveloped zinc, lead, silver deposits in Western Canada, and our recently acquired Mississippi Valley-type AB property in Northwest Territories. The AB property has the same geological environment and mineralization style as the Pine Point, Polaris, and Nanisivik lead zinc mines. These are all northern company builder-type zinc mining operations, and that's what Blind Creek is targeting.
Brian, do you have an update on exploration activities on your Blend property?
Blind Creek's flagship property is the 100% owned Blend project, and it's situated 63 kilometers northeast of Keno Hill Mines in Yukon. I had the opportunity to visit the property in late June, and I was very impressed with what I saw. Blend is, as I mentioned, one of the largest undeveloped zinc, lead, silver deposits in Western Canada, with zinc mineralization traced over an 8-kilometer strike length and a vertical range exceeding 700 meters. The deposit remains open along strike and at depth, and this is just a huge mineralizing system. There's been more than $9 million past exploration expenditures at Blend, $5.2 million to Blind Creek's credit, and past work includes some 25,000 meters of drilling and 125 drill holes. In 1991, Billiton conducted a historic open pit resource estimate, and they came up with 19.6 million tons, averaging 3.04% zinc, 2.8% lead, and 56 grams per ton silver in a shallow sulfide-only resource that represents 1.3 billion pounds of zinc, 1.2 billion pounds of lead, and 35.3 million ounces of silver. This is a very large metal endowment. And I must state that Billiton's resource is not NI 43-101 compliant, and Blind Creek is not treating the historical estimate as a current mineral resource or a mineral reserve, and the historical estimate should not be relied upon. Blend has excellent potential for a combined open pit underground mining operation. Our 2017 exploration program will focus on developing a density model and revisiting previously unreported metallurgical studies and results from blend mineralized material. Results and conclusions from this will provide the basis for a NI 43-101 compliant underground and open pit resource estimate and technical report, which is to be completed before the end of the year. Since we last talked, Jim, Blind Creek has engaged Terralogic Exploration Limited to conduct the field component of the previously mentioned work program, and Moose Mountain Technical Services has been commissioned to calculate the blend resource estimate and prepare the NI 43-101 technical report. I should also add that I presented Blind Creek's blend project to the Nacho-Nyack Dun First Nations last month in Mayo in Yukon. We were graciously received and related the company's commitment to work with the NNDFN in advancing blend, respectful of each other's requirements and committing to work together in a productive and cooperative manner.
What can you tell us about Blind Creek's new AB property? On
July 27th, Blind Creek announced it had executed a formal agreement to purchase 100% undivided interest in 3,000-hectare AB zinc property from Eagle Plains Resources. Property is located 263 kilometers west of Norman Wells, Northwest Territories, and 123 kilometers north from our blend property in Yukon. Historic work by Welcome North Mines at the AB property first identified carbonate-hosted zinc-lead mineralization in 1974. Eagle Plains work between 2005 and 2008 was driven by the carbonate-hosted Mississippi Valley type, or MVT, zinc-lead deposit model, with notable northern Canada MVT deposit type analogs that include the Pine Point, Manasivic, and Polaris mines, as I mentioned previously. The AB property has seen more than $4.4 million in past exploration expenditures, with work culminating in the discovery of a number of Mississippi Valley type lead zinc occurrences between 1974 and 2001, or 2011 rather. The two best showings are situated over a 500-meter and 1,000-meter, respectively, coincidental IP, iron, zinc, soil geochemical anomalies that may represent large buried mineralizing systems that have never been drill tested. Previous sampling has returned trenching and drill intercepts in the order of 30 meters of disseminated sphalerite, including 3 meters of 12% zinc, respectively. Trenching at the nearby ABC returned 69 meters of 10% zinc. The AB property acquisition fully complements our Blind Creek's focus on developing a quality portfolio of 100% owned properties with geological characteristics and signatures supportive for the potential discovery and development of large tonnage, high-grade lead, zinc, silver deposits. The company has commenced the permitting process and is formulating plans to drill test the previously mentioned IP geophysical anomalies for MVT lead zinc mineralization in 2018.
Brian, Blind Creek recently acquired the Engineer Gold Mine in northwestern BC. What's the story behind that?
Blind Creek is and will continue to be focused on silver, lead, zinc exploration and development at Blend and now AB. The company is committed to adding value for shareholders by advancing the Blend property to the resource and PEA stage. You can see from the recent AB acquisition that our strategy also includes the identification and acquisition of other quality silver, lead, zinc exploration opportunities as well. When it comes to Engineer Gold Mine, which the company acquired this spring from BC Gold Corp, Blind Creek had a unique opportunity to acquire an historic and fully permitted high-grade gold mine for pennies on the dollars historically spent on this relatively unexplored gold system. Engineer Gold Mine has a high-grade NI 43-101 gold resource and is fully permitted for small-scale gold production utilizing the on-site mill. The previous owner was focused on small-scale gold production and lacked the capital to follow up and drill test numerous exploration targets. Blind Creek owns Engineer Gold Mine outright. The company nearly tripled the property size by staking this spring and is currently working on a NI 43-101 technical report that is expected to recommend continued exploration for additional high-grade veins and bulk tonnage gold mineralization. Another important update regarding Engineer Mine has to do with a recent meeting the company had with the Carcross Tagish First Nations in Carcross on July 17th. The company was very warmly received by Chief Andy Carville and a number of elders. This provided an excellent opportunity to introduce Blind Creek and our plans for Engineer Mine to the CTFN and hear firsthand their important issues and concerns when it comes to mineral exploration and development in CTFN territory. We are delighted that the CTFN is pro-development and very willing to work and partner with us in advancing Engineer Mine by continued exploration towards sustained small-scale gold production. Blind Creek is about to commence an exploration program at Engineer Mine that will entail geological mapping and sampling, soil geochemical surveys, and quite possibly diamond drilling of the BC gold-silver exploration target immediately south of the Engineer Mine proper. So I guess in summary, Jim, since we last spoke, Blind Creek's acquired the AB property in Northwest Territories. We've commissioned 2 prominent consulting firms to undertake resource estimation and prepare an NI 43-101 report for the Blend property. We've engaged and initiated important dialogue with First Nations regarding continued exploration and development at Blend and Engineer. The company will have crews in the field this summer at Blend and Engineer Mine and is in the permitting stage for the AB property. There'll be no shortage of company news flow over the next few weeks, and any investors wishing to learn more about the company should check out Blind Creek's website at www.blindcreekresources.com.
Brian, thanks a lot for the update.
Absolutely, my pleasure, Jim.
My guest was Brian Fowler, Blind Creek Resources President. We were speaking on August 9th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of Howe Street Media Incorporated.